We're going to get started here. Couple minutes, get started and get this thing rolling. So wind up your conversations and grab your seats. Johnny's the clicker working? Want to welcome everyone here to another year of Farmcon. So we're excited. We got a great crowd. As everyone says, I don't know if you guys can see me. I'm kind of blocked over here into the flag, but I appreciate it. We learned a long time ago that what makes the event is the people that are in the room. So we're more than blessed to have everyone here. Lots of great folks, great minds in the ag world and in the investing and trading world. And so we got a great crew lined up to speak and talk and have conversations. We're kind of going to get back to where we were a few years back, or the old days, I'll say. I hate when people get up here and self-promote. I just hate going to conferences that are pay to play on stage and sit and listen to a bunch of advertisements. So I felt like the last couple of years kind of got a little bit of that way with a few panels kind of competing. So we're going to make sure this year we're all here to share. I'm here to tell you my mistakes that I made this last year, some of the things I'm looking forward to coming up, and some of the things I learned. So like I said, I consider us all just one big family. If there's something you see you don't like, or if something that you think we could do better at, let me know. It's my fault. Don't blow my wife up on the coffee. We had a little crosswire. I told Andy last year, had people step up, and we do the lunch and the breakfast and everything and pay for the coffee and everything. They got a bill last year. It was $25,000 for the coffee outside of the food. Well, I had, as you can imagine, a little blow up with some people, and then I think that kind of got some wires crossed. So we're going to get the coffee fixed next time, I promise. I won't step in and take over and intervene like I did on this one. So my fault on that one. We're trying the first year at this app thing. Kids drugged me to a conference or two this year. They called me. Jordan's like, Dad, you got to get on the app. It's all through the app. Well, you know what I said. I'm like, I ain't going to the conference. I'm not loading an app. I'm not doing all that. Kicking, screaming. And Kennedy's like, Dad, seriously. You talk about all this technology and you got to use it, and you won't even download this app to your phone. So we went over and made the switch, made the big jump to do the app. We thought the app, and I'll tell you why. I went to those conferences, and I got a little out of some of the content, not a whole lot, but I really got a lot out of the app and connecting with people on business deals, some side deals, and different things. So I'm just saying, try and be proactive. If you're not on the app, I understand. I kicked and screamed as well. No one can get on the app that isn't here or registered for Farmcon. We've had a lot of people call, can I get on your app? No, you cannot get on the app. So we don't sell the data. There's nothing like that. And it's just our group of, what I say, friends and family. So feel free to share thoughts and ideas. Let me click through. A couple of things on the app. There's your attendees. You can see I got them circled. Next is schedule. We talk here on the Farmcon feed. Feel free to post whatever you may want on there. We were at a few events where people posted they were looking to hire some folks, or they might be looking to do an acquisition or looking to sell their business. Feel free to use it as you see fit. We got a poll section where we're polling. If there's a poll you want asked, that's somewhat nothing crazy. If there's a poll you want to ask, or if you're a business that wants to have a poll ask, get with my daughter and she'll put it on there for you. Kennedy, raise your hand. She'll put it on the app for you. Kennedy's our brainiac, so she did the app and all that jazz. So if you need anything on that front, feel free to add it. Down below are your connections. Like I said, people you meet, connect with. I loved it. It worked great. Also, there will be the bottom events. I know Meristem has an event. Organics has an event. We're doing something different with AgSwag now. We do a general store for companies. So if Conestoga wants to have a appreciation day, a customer appreciation day, or ADM or CGB, we do a general store, and it'd be the CGB general store or ADM general store or Cargill, whoever it may be. And then we supply the merch. You guys are getting Ag Swag bucks you can use out at the general store. Buy anything you want. I think the $25 gift card or something there. So, but we've had a lot of luck with that and a lot of traction, so things have been going well. Pick up whatever you might want, and should be good. So I think you guys will enjoy it. Let's just kind of move forward. As we like to say, execution's everything. Download the app. If you're going to be at this show and spend the money and listen to things about technology, probably take the step and download the app. We were having conversations last night about adoption in ag, and it's hard and tricky. And I said, yeah, well, you know, we're pulling teeth trying to get people to just get on the app. So it is tough, but you got to take the step and bite the bullet. Let's go through a few things and conversations we're going to have throughout the course of the next 2 days. Fed talk. I just threw some things together. 4 tightening cycles over the last 3 decades. On average, the Fed started cutting about 9 months after they hiked. So if you look, Fed's last rate hike was in July. 9 months after, puts us at that April 30th, May 1st meeting. Some people are saying they'll start cutting in March. Seems a little early. I think maybe it's more like April, May. So we'll take a look, see how it plays out. As you can see, the past 3 decades, like I said, you can get your stats right there. It was 5 months, 8 months, 15 months, as when the length of time before the last hike to the first cut. A few months back, and there's a lot of guys in the room that'll tell you, I didn't think we'd be cutting this quick. I thought inflation was going to stay stickier. Rates were probably going to stay higher for longer. But it looks like we're slated in. I suspect this cut's coming. So, you know, like I said, in the 4 tightening cycles leading up to this rate cut, stock market rallies into it, rallies maybe the month after, and then it's kind of hit or miss. So probably what we're looking for, you know, the market to continue to run and rally a little bit into the March, May time frame, and then maybe take some chips off the table. Cost of capital matters. I like to put this up here, just something to think about. When we talk to a lot of producers, think about this. They're borrowing $200,000. Having trouble seeing the screen, and I got another computer up here, so you're going to have to bear with me a little bit. $200,000 at 18%, you're talking about $36,000 in interest. Borrow $2 million at 8%, you're at $160,000 in interest. Look at the cost of difference in the money. So realistically, guys, if you're at an 8% operating line, you're very similar to where we were back in 70s, 80s at a much higher rate because it's a much higher amount of money, and the cost of living and the cost of the dollar has changed dramatically. So it is something to think about. Cost of capital surely matters. Same time, inflation was calculated differently back then. The CPI was made up more of food cost. It isn't that way any longer. So is there difference? There's difference in the way the data is interpreted and looked at. If we keep going, look at the dollar. Our belief is the dollar will remain the world's reserve currency. Yes, there are a lot of people saying it's going to be a problem, obviously, with the debt, things of that nature. But we believe that the U.S. is the best place and really the center of technological innovation. And that has led us to what creates a lot of investment into the tech space, which drives the stock market, which keeps the dollar in play and probably keeps the dollar in play. At this point, you got to think at least another 10 years, 20 years. I don't know. You know, forecasting out that far is a little crazy. Talking stocks, we talk a lot here about can the S&P rally another 20% this next year? Crazily, it's happened 9 times since 1928. That doesn't sound like very many, but hell, it's damn near 10% of the time. It's 10% of your data set. 1930s it happened. 1950s we had it happen. 1970s, several times through the 70s, twice in the 80s, and then we had our run in the 90s. I think you rule out the 30s because we just came out of the Depression, so we had a massive down smoke. Same thing, you rule out the 70s. The 1950s, we just came off the war. You had a big economic expansion from the United States. We're probably similar to that 80 period with a little Tech 2.0 in the mix. So 1981, 82, 83, really 82, 83, you've seen inflation drop and rates drop. Stock market took off, had a couple of big back-to-back years. In the 90s, we know it was Tech 1.0 bubble. I suspect if you get a little combination of both, lower rates, lower inflation, tech bubble 2.0, market could rally another 20%. I know there's going to be some debate on that in the room when we have the panels up. I know some people that I know, think it's one of the scariest times they've ever traded or invested. And they, and a lot of my friends, we haven't made a great deal of money in these last couple of years' big rallies. We kind of said there's a time to make money and a time not to lose money, and we felt like this is a time not to lose money. So I'll just be honest, we haven't really seen any massive big gains from our end. We've held our own, had some good winners, and I've also had some sizable losers. But I'm not short, and I don't know if I'd bet against this thing next year. If we're going to cut like they say we're going to cut, I'd be hesitant. Along the same lines, you just had the equal weight index go from a 52-week high to from 52-week low to a 52-week high in no time, like 33 trading days. The fastest since 82. And what we've learned is that tends to happen mostly mid-cycle, meaning we may be mid-cycle. We might be more like 94, 90, or 95, 96. The tech bubble's a few more years out. This may just be kind of mid-cycle, and we haven't even seen the crazy push. Watch the VIX. The VIX is probably going to trade sub 10 this year, but it usually does that mid-cycle. So the VIX has trended lower in each, you can see as you go back. So this may be a big run come up here in tech, and especially if this AI is as big as everyone's going to say it is. And I know our next speaker, Tom's going to talk a lot about that. Whoa, here comes the curveball. I'll probably just skip this slide. But anyway, I'm sure we're going to get in some good ones on that. We'll see how the polls are reading. But, I'll tell everyone, why we have to pay close attention to California. I always hear California news and everything. If California were a country, it'd be the 5th largest country. Make sure you grasp that. 5th largest. And ahead of many big ones. So when their laws change, we have to pay attention. It does impact. I know we don't want it to impact our lives and our businesses and our families, but it's going to, and it's going to happen in a big way. Hell, Newsom will probably be on the ticket in some form or fashion. I don't know. Possibly. Governor of California. I don't know. I just say, I know a lot of us don't like the views on the coast, but we really have to be aware of them and be paying very close attention as we move forward. There will be some conversation about the population boom or bust. We all sat here, 10 years ago, and everybody was talking about how we're going to get to 10 billion people. I'm not sure we get to 10 billion people myself. Maybe we get close. But if you see, we've quadrupled over the last 100 years from 2 to 8. The question is, we could see a sizable reduction as we move out on the time horizon. And then the question just becomes, where are you going to replace your demand? We had the conversation last night. I think Dowd and I were even talking. What happens? We're going to have a lot of discussion about China's economy, the weakening that we're seeing, and actually what we're seeing as far as the decrease in people. If you get to that last slide, last part, it talks about the birth rate in China, and look how the birth rate has just dropped dramatically on the per child, per person basis, and you're probably going to lose, what do they estimate, 80 million people in a quick amount of time. And so we question growth. I question where we're going to replace, and I know there's a ton talk we're going to have here on renewable side and what's happening in the soy processing side of things. And the world needs the protein. I'm not questioning that. I'm just saying I'm not sure if India is supposed to replace China population-wise. I'm not sure India is going to replace China quickly on some of the demand side of things from the commodity side. So we're going to keep our eye on that. I thought this was interesting. I learned this year. In the 70s, they got together the 8 top horse racing handicappers. All right? And they said, we want 40 data points that you folks use to pick the winners of horse races. So they gave them their 40 top data points, track conditions, length of stride, breathing, heart rate, everything from jockey to whatever. They give them 10 of the data points. So you're given 10 data points, you pick your horses. They made their selections. Then they gave them 20 data points. Then they gave them 40 data points. They asked them how they thought they did at the different races. Well, all of them thought they did a lot better with the 40 data points. Guess what? They didn't do any better. 10 data points was same results as 40 data points. I believe, and I tell Jordan, life and investing is about making as many good decisions as possible in the limited amount of time. You're always going to think you need more data points to do something. You're always going to think you need to know more and learn more. In today's world with internet, hell, I think it's paralysis by analysis, right? You just have too much coming at you now, and you can't filter it. So be careful here today. And, you're going to hear a lot of wild talk and wild thoughts and things about the future and things about everything else. I don't know if a quarter of it comes true. And don't let a confusion slow you down, I guess, would be my main thing. You only need the 10 data points, and you're usually making your best decision. So I thought it was very interesting to think about. I wanted to talk about a little about business, and then we'll get Tom up. Things I've learned by making bad investments the last few years. I've learned this: a good product with great distribution and adoption beats everything. A great product with poor distribution and adoption loses every time. Make sure you understand that. The product can be awesome. Poor distribution and poor adoption, it's done with. So when you're investing in a company or they're asking you to put money up, you better talk a lot about distribution and adoption. Trust me, a lot of early ag tech investments that have gone right down the tubes for me, right there. Distribution and adoption. Product looked awesome, looked great on paper. Hell, no distribution, no adoption. So if you look on there, you only have about 15, 20% that are in that early adopter, early, innovator type space. Jordan and I concluded that I think a lot of early ag tech startups just kind of churn through that same group of people. Like there's people that are early adopting, they try everything. They're early adopting, they try it all. Well, hell, then they just keep trying it all. You know what I'm saying? They just keep churning in that spot. You got to be able to get to that back half and your laggards and your late adopters. And that's where I'm saying if you're looking at a business or you're investing in a business, they better have answers for you on how they get to that backside. And I've learned that it's just I'm going to pay a lot more attention to that as I move forward. Like I said, weighing the risk. This is a big one for me now. How much can I influence the outcome of the initial choice or the choices that are being made? Will I have a board seat? Will I not? Can I influence it through my Rolodex? Can I help in other ways? Can I help on the sales or marketing side? Where can I do a lot of the influencing at? Because if I can have that ability to influence, I know I can probably outwork the problem and save my money and save some of the downstroke. But I have to be probably where I can outwork it is what we found. That's our key to success. We just try and outwork everyone. I don't say we're any smarter, but we sure try to outwork everybody. And if we can't have that, I'm probably leaning to the outside on a lot of investments anymore. It's just, I don't know. I haven't had a lot of luck as of late just mailing a check to someone and go to my mailbox and double the money comes back home. It just hasn't worked like that much lately. So sounded good, wish it would have, but it just hasn't. So that's one of the things we're working on this year. Thinking about your business's central strategy. This is a big one for us. Knowing and identifying your competitive edge. And this one I'm going to challenge everyone in the room on. you know, you want to keep your team on offense, the other team on defense, and we go through the list. Alfred Sloan at GM, he just took a bunch of siloed companies. He built GM with a bunch of hodgepodge companies at the time, but they used their central accounting, central staffing, kind of as a home tool to add these other pieces. Steve Jobs, he wanted to build a walled garden, so he was the first to really hire software and hardware people at the same time. And then Jack Welch, I love Jack's comment. He always says the only one sustainable competitive advantage is learning new things and implementing them, executing them faster than everyone else. So one of your competitive advantages is execution. I tip my hat if that's you, because that's the guys picking them up and putting them down and making things happen. Like I said, it kind of goes with that theme. You only need 10 data points, and speed really does matter. All of these go with Friedman's idea that you got to have flexibility. Hire intellectually flexible people in today's world, because technology is going so fast, you don't know where you're going to pivot and where you're going to be. So Netflix went from mailing out DVDs to making featured films. They did it with flexible, intellectually flexible people who understood that pivoting is part of the process, just the overall process. We've talked to a bunch of Wall Streeters this year, and more are telling them their core strategy, central strategy now, and I want you to think about this for you, is technology. And when I heard it, I thought, what the hell? I said, technology has always just been a tool, right? It's been a tool. But now people are seeing that as their central strategy. And I started thinking more and more about it. I'm not sure most of our people in ag, your core strategy should be technology. Whether it's from seed innovation to equipment to whatever it may be, your central strategy, if you think long and hard, it may just be technology. And if it's technology and you can't download an app, you may want to think of some things. Land prices are high right now. You may want to sell. I'm not sure, but I'm just saying, you got to think about your central strategy. It kind of hit me when I started hearing more on Wall Street talk. I said, well, hell, I think we're just as much in this camp as anyone, that maybe technology is our central strategy. So I think you got to think long and hard. I also have to think about pivoting. Pivoting is just part of the process. I mean, it isn't that you set out to pivot. It's just part of any business process. What about, you see all the major cloud producers now, cloud providers, they're all wanting to make their own chips, their own AI chips, their own things like that. Well, what if, I suspect, I'm long NVIDIA, so this would be my argument. What if NVIDIA goes backwards, gets into cloud space? I think they might. I think they just might. They're going to smoke a lot of people if that happens. So what if in ag you start looking at other places, because we're seeing this a lot on Wall Street. What if your ethanol plants started buying feedlots? What if they start looking at poultry operations or dairies? Like I said with Alfred Sloan at GM, you take and keep your core strategy, and you keep the core strategy in place, and you start to add incrementally into the other businesses that are creating some profit or cash flow. Let's put it that way. You want cash flow positive, obviously. What if ADM, Bunge, or Cargill, CGB, what if they start buying farms, going backwards into the chain? Bigger farms. I guarantee if they look back now, they wish they would have started buying them 20 years ago and bring their core value and their core channel and their core competency to that and adding in. I suspect we could see that start to happen more and more. I think you're going to see more ag businesses try and go, just like you're seeing in the tech world, try and backflow in with their core, you know, like I said, an ethanol plant making the DDGs, are already buying the corn, you know, making the jump. So I would look, you know, buy assets in adjacent channels that are cash flow positive, and then try to add your value and core value on top. And that's where culture comes into play and a lot of things like that. Interesting story about chess and an analogy of technology, where in the hell we're at in this whole thing. Story about how chess evolved or was created. Go back, some will say it was, 500, 600 AD, and some say it was 200 BC. Supposedly, in some wealthy Indian, people from India created this game, the individual did, for the king. And the king absolutely loved the game. And the king said, what can I do to repay you for the game? I'll give you anything you want. Jewels, precious metals, any gifts. I mean, the nobleman, the well-educated nobleman says, I'll take 1 wheat grain and double it every time per square. So I want 1 wheat grain on the first square, 2 on the second, 4 on the third, 8 on the fourth. King's like, hell, that's no problem. Shouldn't be an issue. Well, they get halfway through the board. You're talking about 4.3 billion wheat grains, about 279 tons of wheat. The king's like, holy hell. We can make this happen, but there's a lot of wheat. This guy really took me here. Well, then he had another smart guy say, well, you ain't seen nothing yet. Look where we get to when you start talking second half of the board. 1 trillion tons of wheat. Well, to let you know, last year we only produced 781 million tons of wheat. Not a billion. This guy, for the game of chess, was going to get 1 trillion tons of wheat. The High King got pissed, got mad. Supposedly one story is they executed the guy for making him look like a fool. The other one is, I don't know, he just kind of rode off and they got him out of there. But the point is, a lot of people say we're at the second half of the chessboard right now. And it's going to start going fast. And we've talked about this several years. And how's everything happen? Gradually, then all at once. What do we see with the electric vehicles? Gradually, then all at once. Here we are. And I think the same is going to hold true as we move forward. So, start to ask about AI. Let's think about this. Think about the freezers and refrigerators, all right? They came about in 1928, 1930s, but it wasn't until the 50s, really, that everyone had more electricity available, that you started to have families getting freezers, refrigerators, and freezers. You know, there was a lot that had to go into it. And then the question becomes, who made all the money? Do you think it was the people that made the freezers? I don't think so. Coke, Birdseye cleaned house. Tyson, General Mills, wasn't the people that made the freezers. So the question now in AI is, who's going to transport and use the AI and make all the money? Will it be John Deere? John Deere's, I'm telling you, on a lot of Wall Street buy list because of their AI capabilities and where they're at. I know they were at the big Comdex show last year and kind of got rave reviews, and I know we're seeing more and more people move that way. So don't think so much of who's creating AI. It's like who's going to use it to their benefit and really capitalize on it. And there's a lot of bets that Amazon may even have further gains and widen their moat even further. These are all interesting things that we're going to talk about and think about. That's why I brought in the expert. Tom, I think it's going to turn it over to you. It's going to be your show here. So we're going to sit back, listen to Tom. We'll talk. We're going to take a break. Then we'll come back with our first panel. And like I said, if anybody needs anything, my family's around. Cash in your Ag Swag bucks out at the door. And let's have a great party and a great time. Thank you, everyone. Appreciate it.